So that should be us live. We're going to go through the charts with absolutely zero preparation. We're just going to basically break them down as if we would, looking at them before we've even had a chance to properly set them up. Because normally we do these lives and we do a little bit of preparation to make sure that we've went over all the levels, our analysis is correct, but today we're going to do this from the very start so you can get a better understanding of how we would prepare from the very beginning before we even go live to you guys. So we're only going to work on the major currency pairs. It's going to be unfortunate if they are really good setups in the minor currency pairs, but it's just a sake of time, and it's not to give you the trades that we are going to be looking to trade so much this week anyway, but it's more giving you our process and our steps that we take in order to make sure that the week starts off good. We know where everything is, we know what pairs we should be looking at, and we know the best setups, because you could be looking at a pair, Aussie JPY, Aussie CAD and Aussie US dollar. One of them is going to have the best risk to reward, the best return and the best probabilities, but it's really just spotting these. So enough talking, we're going to get into the major currencies right now. So top to bottom we're going to work our way down, and we're going to start with the dollar index, because the dollar, in fact, let's go to this, the dollar index. So again, we like to start on the weekly because we get to see what happened last week and what might be looking to occur this week. So as you can see here, the dollar is progressing up the way. Now, in the grand scheme of things, we are, of course, we are bearish, okay? We are bearish on this. So we could argue that we had some form of descending pennant pattern, and then we've ever so slowly just started breaking out, but not really in a direction, right? We're consolidating right now. Now, it has been said by multiple people that have strong influence and also strong presence in what happens with the dollar, say that they do think the dollar had been overextended in terms of excitement. So the market has overextended in terms of excitement in a bullish manner. So it's went up more than it's expected, and typically Fed Powell thinks that we are going to see more dollar weakness in the months to come, longer term. So if we start to look, so we broke it down in the weekly, we know that we were firmly bearish. Now we are consolidating outside of that bearish pennant, and then we're forming sort of like a new pennant. So I'm thinking personally for the dollar, just looking at the way things are going right now, I think we could come up to an area like this. So as you can see here, we zoom right in, you'll see that we have a nice area where the market has had effective touches. Now you can see here we've had, technically you could say, I mean, I would like the candle to be up here a little bit if it was a head and shoulders, but you could argue this could be a shoulder, this could be a head, this could be the other shoulder, and then we have broken probably a neckline you would say would be something like this, come back down, broke it into retest. You can see how accurate the edge of the candles have hit against this neckline, and then we've seen that push down. So back to more recent times, if you just stick to the hourly, the 4 hour, sorry, I'm thinking an area like this we could come back up to. Okay, so if we slide this right across, we could come all the way back up, start creating higher highs, higher lows, and then maybe sort of drift. It might actually come down here, then come back up, then in an area like this, and then start to come back down. So me personally, that's what I'm thinking. I think we might get some short-term I'm thinking we might get some short-term bullish momentum, and then overall we will see that bearish trend again, and that's an area roughly where I would be looking to take any sell trades. But looking at this right now, you can see we've got this saved on the charts. Let's go back and really start to analyze what's going on. So we do have this ever so slightly rising wedge. You can see that price action is getting squeezed, and that's currently what we are seeing. I mean, there is nothing fancy about the analysis that you have to be doing. You don't have to be throwing on Fibonacci's if you don't need to. You don't need to be doing anything too extreme. This is very, very, very basic analysis. And sometimes keeping your analysis basic, especially when there's so many indicators, there's so many different techniques and strategies that you're going to see other people posting and maybe even being profitable with, a superpower in trading is knowing when to keep things simple, because simple is so effective. So effective if you're able to marry that up with discipline. So let's just make this a little bit more accurate, okay? Because you can see here we're a little bit off. So that's more the top of the channel that I would say, okay? And then let's just make this a little bit more accurate. So now we are starting to see that price action rise up. So I'm thinking that we could hit a level just above 12100. Of course, using 𝗙ecie is a lot easier for numbers and stuff, and it is a little bit different in the terms of its layout. But again, focusing on price action, I do think that we are going to be bearish. So looking at this, we're in the US dollar. This is what we're going to be keeping an eye on. So this is what we will typically do before we start analysing any pairs, and then you must understand the correlation between USD CAD and the dollar index, GBP USD, even euro. The dollar has a big effect on the euro. Typically speaking, we've said this multiple times, when the dollar is weak, the euro will be strong, and vice versa, because obviously when the dollar goes weak, you need more dollars to buy certain things in other countries. So that is typically why you will see the euro, things like that go up when the dollar is weak, because the dollar is of course the currency of the world. It has the most weight in all the markets. So moving on, let's move on to USD CAD. Bearing in mind that we've done our dollar analysis, we do think that we are going to see some long-term dollar weakness. I think we will come back down to retest an area, something like this, once we get up to around here. But again, do not take what I'm saying as gospel. This is just speculation based on my experience in the markets and what I've learned and what I have seen. So again, they should never ever take any of these lives or webinars or anything like that as financial advice, because it's absolutely not. It's a financial guide that could help you make better decisions and give you another insight that you otherwise may not have been able to see on your own accord. So again, take that in mind whilst we go through these pairs. So let's go to USD CAD. And again, we always start with the weekly, okay? What happened last week? Okay, so we did see that nice shooting star candle a few weeks back that we thought we were going to continue that dollar weakness. We are seeing price action stay under that 50 daily weekly EMA, and we have started consolidating in this range. Now, I like to call this as fanning, where you have multiple trend lines. So say for example, we had a trend line here, we had a trend line here, and a trend line here. Now typically what fanning does is it provides an insight to when price action might drop again. Okay, so if we have a trend line that is this narrow and this steep, we are going to be finding ourselves having a break of this trend line a lot faster than opposed to if price action was to repeatedly be hitting off this trend line. And then if that one gets broken and we do start to find support at a trend line like this, we know that once we've broken all three of those trend lines, there's a good chance, not guaranteed 100%, but there's a good chance that price action is actually reversing, and we should be looking to possibly be aware of any retracements so we can then get back and buy in positions. If not, you might actually see price action come back, break all 3 of those trend lines, or 2 or 4 or whatever it is that you have drawn out, find an area of support and take back off. But we just put these little things in place so we can use them as confluences. Okay, we would never say, okay, that it's broken a trend line at this degree, so it's definitely going to be moving to the downside. Absolutely not. We stack them on top of more confluences, so then when we do put our money into these trades, we can start to feel like we have more confidence because we've done the proper analysis and we're also stacking the confluences. Okay, so right now you can see price action's been consolidating in between these 2 red zones. Just let's call this 125.790, and then let's just say 124.300. Alright, so we were expecting price action to come back down into an area like this, but of course we have seen just further consolidation. It seems to be a theme right now. The dollar is gearing up, but gearing up for what? That's what we need to analyze, and that's what we need to carry into our decision making. So right now USD CAD is not really anything interesting for me right now. I mean, I would wait until price action maybe comes back down in an area like this before we were to start looking at taking any action on this. But again, like I say, nothing too exciting. If we go to the daily, long term, I mean, we could see price action come all the way back up to highs around about this area. So just say just under the 134.000 handle. But of course, we need to get out of this little consolidation phase that we're currently sat in right now. So I think once we break these highs around about 127.600, then it will start to open up the gates to then look to try and go back up to that 134.000 handle, which is ultimately what we would be looking to do. But again, we need to make sure that it's going to be matching up with the dollar index. So we need to make sure that we're constantly checking to see, okay, if we do get long in this position, where is price action likely to go based on the dollar index, and is it even likely to go up higher? I know we could actually start to see some dollar weakness. We've seen some dollar weakness last week, but I don't think anything is being sustained just yet. I don't think the market's quite made up its mind. So we have to, before the market makes up its mind, be prepared for any situation, either going long, going short, and then mapping out what is going to be the best possible position for us to get in it. Because we could be looking at GBP USD and Aussie USD, and one of them could be a much better position, a much safer position, a greater risk to reward. And also the fundamentals might be slightly more in our favour. Again, we're going to cover also in this live matching up the fundamentals and how we'll do it based on going through the full weekly watch list, analysing all our pairs, and then coming back, checking the fundamentals. We want to be making sure that we are not getting trapped in any trades that have high impact news or multiple high impact news events being announced whilst we are still in, because the market just becomes too volatile. And I think personally, I mean, there are ways to do it safely, and I know a lot of people who do use fundamentals and they will trade NFP, but me, that tips over a little bit more into the gambling side of things, because you have literally less control over the market. We've barely got any control as it is, so we want to be making sure that we are safe, and we want to be making sure that we have as much control as humanly possible. So I mean, US dollar CAD for me right now, I mean, we could stick it on the watch list. It's not something that I would probably be looking to action this week, but nonetheless, I want to still be keeping my eye on it and making sure that if there are any positions that are likely to lead to good profits, that I'm aware of them and I'm ready to execute on them. So let's move on to cable, GBP USD. I'm going to remove this because you can see, hopefully, we have a small flag pattern, and I do think that we are going to get that continuation. I'm actually going to take this away because I do think we will hit the highs around about 141,800. So let's go back to that. So daily, I mean, we are struggling really to get above this 50 EMA on the daily. That's kind of what I'd be looking to see, but Friday there we did have a bullish candle that has pretty much matched the preceding candle's volume and range. So that is a good sign. And as you can see here, we've had two strong bullish candles up, and now we are slowly starting to round off. Now if you can see, this is typically what I look for. I mean, we've got the wicks here, right? We've got the wicks, we can see the shape of the wicks, but it's the wicks of the candle, it's the shape of the candle bodies that sometimes I will look at, and I'll follow it with my eye and see what shape it is making. Because we could do this with but it's not really accurate. It's the open and the closes that you want. Okay, so if we're looking at just the open and the closes, and we do this mouse by mouse, you can see here we're pushed down, pushed down, pushed down. Now we're pushing up, we're trying to push down. If we fail to really get outside of this open and close on the last 4 hours here, this is a good sign when it starts to round off like this, especially when we're gearing up for a push in a bullish manner. Rounding it off like that is typically a good sign. So one could say that this actually would be a good position to get into. Again, please, this is not financial advice. I'm not asking anybody to take this trade, and it's not something that I'm taking. I'm just speculating for the sake of giving you how our thought process works and how we look to get in these trades. So if we go, we are in a flag pattern, right? So it's quite a big stop loss. But again, we created that nice double bottom, keep our stop loss semi-tight. But again, we are on 70, 80 pips. Everybody's got their different strategies. People who are doing scalping and things of those sorts, obviously you wouldn't be putting on trades like this, but again, this is just to give you an idea of how we look at the trades. So again, flag patterns are just pauses in the market for continuations, and of course this is a bullish flag pattern, meaning that we do have good reason to believe that price will continue to push higher. Okay, so, and typically speaking, we've just broken down that when we get to the bottom of the market and we're wanting to push back up, price action will tend to round off a little bit before making that push up. And because we have had some good bullish momentum on the 4 hour, as you can see, we engulfed these candles here. We had another really strong bullish candle, so 8 hours of really strong bullish price action that's engulfed these candles here. Now we're just struggling to fail to break these highs. We're pulling back ever so slightly, and I do think we're going to get that next run up. Again, monitoring the dollar index to make sure that we are still looking at trades that are good to take. So moving on to Aussie USD, you can see here technically it's a bearish flag pattern continuation, but price action is just choppy, it's moving side to side. So if I had to choose between GBP USD and Aussie USD right now, I would definitely be choosing Aussie USD, GBP USD, sorry, apologies. So I'm actually going to take Aussie USD off the watch list, because for me right now it's not really exciting me, it's not really doing anything, and we are just sort of range bound. I did think that we were going to get that bearish flag pattern continuation back down to an area like this, just above the 0.72500 handle, and then we will see what happens from there. But again, when you start to get good at trading, you get very, very good at leaving things off your watch list. My watch list used to be big, and I used to try and trade multiple of the same sort of setups. Like if it was Aussie JPY and Aussie USD and Aussie CAD, I'd try and get a little bit of them all, and it's just absolutely pointless. You're better off focusing on the one, making your stop loss a little bit bigger and risking a little bit more. I'm not advocating anybody to risk more than what, one, they're mentally prepared to lose, and two, any more than something like 3%. But if you're risking 1%, and you've got 3 really good setups, and you try and do 1% across the 3, you're probably better off just risking 3% and making your stop loss bigger and then managing the trade. But again, you've got to have a really good understanding of market structure, you've got to have a good understanding of volume, you've got to have a great understanding of behavioural finance, and your emotional intelligence has to be pretty solid. So again, that might not be a strategy for people watching this right now who have maybe just got in the markets, or maybe you're only a year or two in. Once you start hitting 4, 5, 6 years in, and you're doing this consistently, and you've drilled in good habits, and you've really been learning and understanding, then you can start to chop and change. Not really so much strategies in terms of how you get in, but how you manage the trade, and also just being more efficient, because I think it's more efficient to risk 2% to 3% on one pair, as long as they are within the same group, than it is to try and do 1% over 3, because 1, you're paying more spreads, 2, it's a lot more management, and 3, it's a lot more stress. So that would be my advice for cutting out scenarios or setups that probably won't serve you, but it's just that fear of missing out coming at play. So moving on, Euro Aussie. Interesting, actually. I like the look of this. Looks like we might be creating a little head and shoulders here. We see the shoulder, you see the head, you see the other shoulder. We're failing really to break this now. I think we might come back down. So again, I'm going to keep this on the watch list. It's not something we're going to action right now. But I mean, looking at room to the downside, I mean, one could argue you can maybe get a counter trend trade. But again, if you are not familiar with, really, I wouldn't recommend this for anybody watching right now to be taking counter trend trades. I would just be patient and wait for price action to come back down in an area like this. But of course, if you are more experienced and you know what to look for, we could potentially get a counter trend trade. Right now, I mean, there's no signs to tell me that the counter trend trade is on. We're creating the higher lows, higher highs and higher lows, sorry, and the momentum's there bullishly. I'm actually going to keep this because this is something that I wanted to cover. So again, nothing really for me counter trend, but I'm going to keep this on the watch list because it would be something that we would be looking to trade should we start to see price action come back down into an area like this, or we might even just not even come back down as low as that. We might even just come back down to these lows and come back into an area like so. So again, you don't want to be married to one particular direction. You don't want to be married to one particular bias. You want to make sure that you've covered all angles. Because if you do cover all angles in a buy or a sell, you're never ever, unless you've not been paying attention to the charts, you're never going to miss out on opportunities. And sometimes opportunities on certain pairs really start to trend once every so often. And you don't want to be waiting around for the next so often just because you missed the first one. Make sure that you are being prepared for both a move to the upside, a move to the downside. Know what's more probable and know all the getting ins and know all you're getting out. You should have a strategy for getting in the market, but you should also have a strategy for managing and getting out. You should have rules in place and you should have a checklist in your head. Mine isn't on paper anymore because we've been doing it for so long now, so consistently, that it does get a lot easier. So again, counter trend trade, I would leave that for now, and maybe once price action starts coming back in any of these areas here that you see on the chart, then we can maybe look at getting in. So moving on to your GBP. Again, real choppy. We've covered this multiple times. Created another lower low, so we're going to create a lower high. We might actually come all the way back down to 0.84000 handle. We shall see. But right now, what's happening is price action is really getting squeezed. We ever so briefly came back out it on the 21st or the 20th and the 21st of July. And now we are just squeezing. I do think we are going to get that pop to the upside. I'm going to sort of watch what price action does here because we've broken below this area of support. Sometimes price action will break below. Think that we're going to get this retest to come back down lower, trap a lot of sellers, and then we get that small little push back, and then boom, push right out. So again, that's what I'd be looking for typically in your GBP. I'm looking for the buyers to step back in, start taking some control. Because you can see here, we've pushed up, we've not really moved away and ever so slowly we have just really not really done much. We have moved down in a bearish fashion, but we've not really done much. So I do think it's about time that the buyers step back in the market. And if the dollar is weak, typically the euro will be strong, but then of course the pound can sometimes be strong. The pound has been over the past couple of months, more so the last month, just with everything opening back up, the pound has been booming. So not married to a particular direction. If I had to put money on it, I would say that we are going to get that pop to the upside. When? Nobody really knows. We're not really getting any great signs right now, but we could get one soon once we see price action come back down into an area where you see these highs here, because we're coming back down into the area of that support zone. We're also getting squeezed in a descending pennant, a descending wedge, whatever you like to call it. So typically that also provides another confluence to the upside. So let's see if we can find any other confluences here. I mean, we do have a real nice area here where we do have marked in red. So again, we know that price action typically, especially when you see that last touch as well on the 5th of April, significant pushes away. So I do think that this will be another area that we need to be paying attention to. I do think that we will get a reaction, and I do think we could go back up to 0.88500, just under 0.89000. And that's what I'm looking for in Euro GBP. But again, nothing is happening right now. Staying on the watch list, we'll monitor it when price action reaches this area, and then it'll be down to our analysis on candlesticks, volume, and just typical market behavior, just good knowledge on market behavior. So USD JPY, again, typical of the dollar right now, consolidating, moving from side to side. Not really anything I'd be looking to get in right now. It's just very, very, very choppy. Although you could, I know a lot of people with their trading strategies would be able to get in nice little entries like this. So for me personally, I'm going to leave this one out. It's just moving up, it's moving down. You never really know how long this is going to consolidate for, because one could easily say, okay, we're going to get to this zone, we could take a buy back up. But I mean, how long is that really going to last? We've done it a few times now. It's best just moving on to something else that will provide us with some more profit. I'll put it on the, so you can see here we have a future, so ones that probably will manifest next week, or maybe take a little bit more developed than that. We've got ones that we've entered, we're currently in the market right now. We've got ones that we're watching. Up and comers is like things that we could look to trade in maybe 6 months, a year's time, once the market gets some structure. And then we've got our ever increasingly popular cryptocurrencies. So let's just go back to, let's leave USD JPY for now, okay, and we are going to keep going on. Let's go NZD USD, okay. Again, I'm going to take this off the watch list. Not impressing me at all. It's just moving horribly, like horribly. I don't like the way it's moving. But I mean, you can see on the weekly here, we have broken out this, I don't really know what you would call that, to be honest. I mean, it's a wedge of some sort. It's not symmetrical, it's ever so slightly descending, but we are slowly starting to come down. You can see that the sellers are really getting pushed away hard here. So the fact that we are pushing out, we could see price action moving higher from here, and I do think we could go in an area like this, where you have the tops of these highs here, with the top of this high married in with the top of these, slide that across, and potentially we could get some more buys back up. But again, could this be a symmetrical triangle? think we might actually get a symmetrical triangle here. Yep, pretty much. I would say that's pretty solid. Symmetrical triangle. And what happens with symmetrical triangle? Well, it'll break out to one side. Now, normally symmetrical triangles can break to the upside, break to the downside, but because we have moved above this area of nice support, we're in a symmetrical triangle, we've broken out of that bearish move on the weekly and NZD USD, we could actually get a pop to the upside. We're finding support right now on that 50 EMA on the 4 hour, and if we were to, again, we're not saying that this is the trade that we would take, but if we were to take the trade something like this, we would have our stop loss around about here, and then we would look to take price action back up to an area like this. So as you can see here, decent sized stop loss. Do we have an entry signal? No, but we do have multiple confluences. We have a symmetrical triangle that's just broken out. That is a confluence. We've broken out of a weekly bearish, ever so slightly descending triangle. Another confluence. We have pushed above a real nice area of support, which was resistance, but obviously once an area of resistance gets broken, it comes back down as support. We retested it, pushed away. We've failed to push away considerably higher, but we've come back down for that pullback. And if you look at the candles here, it's taken 1, 2, 3, 4, 5 candles, and we've still failed to break that previous 4 hour candle, and we are looking like we're going to start finding support on the 50 EMA. So again, multiple confluences to tell us that this trade could potentially be going higher. So absolutely, I'm going to be looking at keeping this on the watch list. It wasn't really moving very well. Like, this is just sort of a mess to me, but the fact that we're able to make some sense, we're able to get clear price action, clear patterns, and we have an overall sentiment from the higher time frame working our way back down. We're getting a proper good bird's eye view of where this pair can go based on facts and based on market knowledge. So GBP JPY sold off pretty hard here, so let's just break this down from the start. Let's remove that and let's go to the daily. Again, real nice area of support, very nice area of support. We had that shoulder, head, shoulder, and inverse head and shoulders. We could be coming back down to retest ever so slightly one last time. This would potentially be a neckline. We could get that push back in and then back up to an area like so. So something like that, alright? Sliding back over, and then boom, here we go, we're in. That could be what's happening. Right now, obviously, we've got real strong bearish momentum. Last Friday, we closed bearish. Today, we've started bearish, but we are starting to see price action slow down. Now, typically, you could say this as a double bottom, and what do we want from double bottoms? The same as we want every single time, is we want a lot of space. The bigger the gap in here, typically the better it is, because what happens is it tells us that the bulls are really being respected here. If price action comes up, comes back straight down, goes up, comes back straight down, then that's not really a good sign that the bulls are in control, that the buyers are in control. So already this double bottom for me is a winner. The fact that we've broken out of this pattern here is also another confluence, but we've failed to really break above that 153.220 handle. So ideally, this is why we put in that break and retest. We want to see, for us to be reaching an area around about the 156 handle, 155.500, we want to be seeing that break of this area that we've struggled to break, 153.220, and then have a respect, something like this, where you see multiple candles before it starts to come back down. So multiple candles before it starts to come back down, get that good strong confirmation again, and then that next leg up. So you could potentially get multiple entries here, get your stop loss to entry, and have only risking say 1 to 3% on one trade, have that stop loss move to entry, so you've got 0 risk on the table, and then add in another position. So that's what we'd be looking for GBP, GBY. I do think we will get buyers stepping back in the market. Pound's always been a strong pair to be trading in the past month. So I do think that we are going to see some bullish momentum. But again, make your own judgments, make your own analysis. This is just what I can see from my end. So Euro JPY, again, coming back down to a real nice area. I'm not going to bore you with this one, but on the daily, you can see what we're looking at here. We did have that really strong bullish channel. We're coming back down to retrace now, and then we're just pretty much going to see what happens when we do approach this area around about the 128.600 handle. So again, nothing too advanced. I mean, we could be throwing on Fibonacci's right now, we could be trying to make patterns, we could be doing loads of different crazy stuff, but sometimes keeping it very simple is incredibly hard, because especially for me, I enjoy doing analysis, I enjoy doing the charts, I want to be throwing on loads of different things, but experience has taught me that there will be times to get really technical and be thrown on these types of Fibonacci levels, making sure that you're going really deep in your analysis, having multiple support and resistance zones, really diving into the price structure, everything. But there are also times where you just need to be patient, let the market develop, and have very, very minimalistic type analysis, so it doesn't cloud and fog your brain with all the other bullshit and all the other noise. Because too many times I've had so much analysis and something will move, one part of my analysis will be incredibly right, and then I'll have something else that's conflicting that'll maybe take me out the trade, or maybe get me to take my profits a little bit early, and it's just not an efficient way of doing things. So trust me, sometimes less is 100% more, especially when we're talking about forex. So moving on to US dollar Swiss, looking very good for another bullish move up. We've had that strong bullish move up, now we are getting that retracement. Again, nothing too complicated, nothing that's going to blow your head. We are literally just looking for that next leg up back to retest these highs here, just under the 0.92400 handle, let's call it, where we had this double top, 0.92, say 300, okay? So is this the 0.6? Typically the 0.6, everybody knows, it's a golden ratio. No, it's not, it's only the 0.3, but let's see where we took this. Okay, so let's say that this is the push phase. Or in fact, let's take it a little bit shorter. Let's say that this is the push phase here, and we're going to start coming back down. So it's on the 0.5 right now, and all I would be looking at is, you can see that we have this nice area of support. The 0.5 is a really strong Fibonacci level to be putting in. So the fact that we're coming back down into that, it matches in with these lows here, the support zone. We've had that strong push up, we broke these previous highs, created a double top, coming back down to retrace, and now I do think that we will get some buyers stepping back in the market to push this up higher back to those highs. So again, keeping this on the watch list. Make sure that you are going over the dollar index again, because we've got some pairs that we're looking at, USD CAD, maybe a sell, USD Swiss, maybe a buy. One of them is going to move in the right direction. You have to decide which one. Okay, moving on, Euro USD. Price action was squeezed. We did have a buy position so many days ago, and now we've created a lower low, coming back to create a lower high, and we could potentially get that push down, because it's sort of coming in line with this 50 EMA. It's coming in line with the break of this trend line here, and then we could start to see price action coming down to an area like this. So that's what I'm looking at for Euro USD. That push, pull back, come back down in an area 1.13751. But again, who knows, we could break back above this, come back down for a retest in an area somewhere around here, and then come back up to retest 1.21260. So again, we have pretty much both areas covered, both directions covered. So again, we're going to keep it on the watch list. Nothing's really popping out to us right now unless it is that respect of the broken trend line. We've created a lower low, created a lower high, again another confluence, couple of confluences stacked up. Then we need to get that entry signal, and maybe even a bounce off the 50 EMA. We don't normally need the bounce off the 50 EMA to be getting in trades, but again, we're all about stacking the confluences. So GBP Aussie could just be a continuation here. It could just be a stall for the continuation. That's what happens typically when you see all this momentum, and then you see prices actually get squeezed in a small area like this. But yeah, we are seeing that nice momentum candle though starting off today, and you can see there's room to the upside. When we do break out of something like that, we could go all the way back up to something here, something like this, and it's sort of coming in nicely with, we might actually just move over a little bit, it comes in nicely with the 50 EMA. The fact that we are creating really nice higher highs and higher lows, we've broken these previous highs at 1.85254, and it's very, very probable that we will go up just above that 1.9400 handle. So again, keeping this in the watch list, and that's what we're going to be looking at for GBP Aussie. So as you can see, we went through quite a few pairs here. For the sake of time, we're not going to go through all the minor ones. We'll post about them later on in the week. We'll still do analysis on that, but we wanted to give you how we would look at the charts with zero prior knowledge of being looking at the charts for at least 3 or 4 days. Wanted to give you an understanding of what we'd be looking at, how we go from the top, work our way down, and then how we go into what we're looking to trade in the more probable setups. But now that we've done the dollar index, we've understand the correlations, we've analysed the major currency pairs, and we know to check it based on how the dollar is looking, whether it's looking bullish or bearish, and then that's obviously going to impact how we get in the market. But one last thing, the last piece of the analysis is of course the fundamentals, and we want to be focusing on the high impact news. Okay, so all these ones here you can see with the time left, these are the ones that are still to happen. We are of course on Monday, so I know high impact news Aussie, we want to be making sure that we know about that. Okay, 2:30 in the morning. Then of course we have the pound, high impact, so that's at 5 o'clock in the morning, 7 o'clock in the morning, 7 o'clock in the morning. So Monday we have no impact news to go. So Tuesday we have 3 pieces of high impact news, 4, 5, 6, 7, 8. So tomorrow is an incredible day for high impact news. Wednesday's another incredible day for high impact news. Wednesday, so a lot of news coming out this week. Again on Thursday, high impact. So it is a pretty packed week for news. So we know that if we do get in any of these positions, we want to be making sure that, especially on weeks that are this packed with news, we want to be making sure that we are not in any of these trades that we don't really need to be, or we don't want to be in multiple of them. Because say for example I took GBP USD and Aussie USD, a lot of high impact news for both of those. I want to be just choosing one, because if there is high impact news, I don't want to get caught out on, say I'm going bullish on GBP USD and there's extreme pound weakness, takes me out my trade. I go short on Aussie USD, there's extremely strong bullish momentum on the Aussie dollar, and then it takes me out of that one too, and then whips right back down to where it started, and then pushes off in the direction that I'd originally said it was going to. So please look at the fundamentals, take notes of when the high impact news is going to be occurring, and use that to make decisions on whether you are going to take a GBP USD position, an Aussie USD position, based on what one looks more probable, and maybe even just the times of the high impact news. It might be one at 2, 3 in the morning. You might want to close your position before you go to sleep so you don't wake up to any nasty surprises and things like that. So hopefully this has given you a little bit more of an insight to how for your analysis, the fundamentals, the looking at the dollar index, the picking the more probable setups, the making sure that you're not trying to disperse 1% over 3 positions that technically are the same setup. Maybe put 2% into a position that is, of course, more probable, and make your stop loss that a little bit bigger. So again, we're going to keep coming back with videos like this. We're not going to do the minor currency pairs, sorry. We're going to continue our analysis once this live's been finished, and then we'll update you all in any one of the channels, whether it be Facebook, Instagram, YouTube, whatever. But again, I hope this has been insightful. We're not really been receiving many questions and comments. Please urge you, if you do have any questions or any comments, leave them in the comments below, message our Facebook or Instagram pages, or go straight to the website www.fxfunds.net, and we'll take care of you over there. So until we see you, it'll be Wednesday at 7 o'clock for the market recap. We hope everybody has a profitable trading week, and we look forward to seeing you all then. So take care for now.